Hello guys. I think again I'm going to do analysis using mitigation block and breaker block. So we shall start with USD card. I'm trading mitigation block and breakers. There are two things that I'm going to give you: a breaker block, then mitigation block. So these are the things that I'm going to show you how to trade using them in H4. This is ICT knowledge. So I'm going to just give you basics. You can trade them on H4. What you should first consider: your time frame, then the structure. When I talk of the structure, you need to know where is the market going. Is it forming high? This is a higher, this is a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, lower high, lower low, lower low, then it break the structure. This is a high high, higher low, high high, high low, high high, then it broke again from a lower low. You see, so you need to know the structure. You're getting it. When you look at this structure, the market is bearish. We are pushing downwards, but we are trading what we call a breaker and a mitigation block. So how do you know that it is a breaker or a mitigation block? I want to show you here. A breaker, the market will move like this. Now, where is our breaker block? For this case, our breaker block is here. This is the breaker block. Why is it the breaker block? This is an order block which broke the market. It took up liquidity here. There was equal high here. It took out liquidity from here. This was the high that this breaker took off liquidity. Then it came again, the market broke. It could not hold the price. When this high came and broke this order block, it couldn't hold the price. So that's why we call it the breaker. So the market will come back here, test it, then drop down. But there must be a breakout structure. You see, there must be a breakout structure. So this is a breaker block. It must form like that. A breaker block. So we trade breaker block. Then we also have what we call a mitigation block. So mitigation block, it will form like this. Have you seen that the market failed? Okay, this is our mitigation block. Let me name it mitigation block. If you look at the mitigation block, the market failed to break this high. You see, this block order failed to break this high. It just pushed down immediately. So it make it a mitigation block. The market will always come back and mitigate it, then we continue down. So this is our key point where we can sell from. So this is a mitigation block for a sell. We can still have a mitigation block for a buy. So we shall have our mitigation block for a buy. So we have just finished showing a mitigation block for a sell. I want to show you the mitigation block for a buy. and also a breaker for a buy. So when you are looking for a breaker for a buy, the market will form also the same move but differently. So a buy breaker, this is a buy breaker block. Why? This breaker failed to break this. It came and broke this low. After breaking this same low which was formed, it took out liquidity here. This same low which was formed, it pushed and broke this other block, then went and came back to this breaker. Then the price continued upwards. Still, I will show you the same example for a mitigation block. So for a mitigation block, I think we all know that there is no sweep of liquidity. Liquidity is not taken. So this is an example of a mitigation block on a bullish move. This is mitigation block on a bullish move, and this is a breaker block on a bullish move. So this is a bullish example. A bullish illustration of a breaker and a mitigation block. Now let's go to the chart. We look for those things. If you look at this chart here we have a breaker here. Why is it a breaker? It broke this low. This is an order block. That one in the middle came and broke this high. You see, it broke this high, then it came and swept this low. Definitely it gave us a range. This was our swing high and also our swing low. Our swing low is here. So this level was broken, but it was broken by this high, so it gave us a pattern. This was our entry area. We were to enter from here, a sell, that is edge for a sell entry. You see, then our take profit was to be at this. How do you call this? Remember, this is the breaker which failed to break this low, so we call this one a mitigation block. You see, so this was this is a breaker block. This is the breaker block. Then this is our mitigation block. You see, so it failed to break this low. You're getting it. It just came and broke this high. We knew there was a break of structure here, so we expected the market to come back to this mitigation block. It came, tapped, then pushed upward. So this is a simple example of those two. When you draw with an illustration, always you need to draw this on a book. You see this move, it came up, then came down, then went up and broke that high, then came and broke this low. You see, then the market came back, then pushed down. You see. So this was our breaker block when it tapped it. So this was the example of a breaker block here. Then for this one, for the mitigation block, you see the market came up, failed to break, then broke up, then came back and pushed up. I want to say thank you. I want to stop here. At least we have got the basic knowledge on this. Next time we shall provide more example of this. Thank you.